Hi friends, we are going to see how the market going to behave in the upcoming week, especially on the Monday, based on the global cues and Indian stock news. Welcome to our channel, Stocks in Silence. So this is the index. Last Wednesday we have seen Nifty 50, Sensex and Nifty Bank closed in red. And after Wednesday, Thursday, the Friday was holiday for the global market, but Thursday again the Dow Jones, S&P 500 and Nasdaq fell down. All were closed in red. As usually, FII sold in last Wednesday 2061 crore and DA purchased 1410 crores. First, let us see the Infosys results. Infosys results came and after the market hours. Infosys Q4 net rises 12% year on year, projects revenue growth of 13 to 15% in financial year 22-23. The Salil Parekh, CEO of MD Infosys, delivered the highest annual growth in a decade with a broad-based performance driven by deeply differentiated digital and Infosys Cobalt-led cloud capabilities, powered by One Infosys approach. We continue to gain market share as a result of sustained client confidence in our ability to successfully navigate their digital journeys, he said. So the overall, the results looks good, but whether the market is happy or not, that we are going to see. Quickly, we'll see the comparison of Infosys and TCS results of recent Q4 results. The left side, if you see the dark blue is for the Infosys, and the light blue for the TCS. The Infosys 32.276 crore revenue in Q4. At the same time, TCS is 50,591 crores. So comparatively, TCS is high. Obviously, if you compare the year on year, both revenue as well as the profit after tax, Infosys 22.7 crore as a revenue in Q4. At the same time, Infosys 15.8 crore. This is we are talking about year on year. When we see the profit after tax PAT in Q4, 12 for Infosys and 7.4 for TCS. Quarter on quarter, compare that PAT minus 2.1 for Infosys. This is the reason the market is not happy, particularly the ADR at US for the Infosys, it is falling down. So it shows as a minus 2.1 and the Q4 PAT, that is the profit is reduced for the Infosys. At the same time, TCS is 1.6% upside. We see the revenue in Q4, quarter on quarter, 1.3% for the Infosys, 3.5% for the TCS. So overall margin in the quarter, Infosys 21.5 and 25.3 for TCS, 25.3 is a crores. So total contract value if you see in financial year 2022 Q4, 2.3 for Infosys, 11.3 for TCS. So the contract for TCS is high, we are understanding from here. And again the attrition rate, that is also more important, how the employees behaves and whether they are retaining or not. The attrition rate for Infosys 27.7. At the same time, TCS is 17.4%. It is lesser than Infosys. So they have the plan of hiring plan for the financial year 2023. Infosys 22,000 employees they are planning to hire. At the same time, TCS is going to hire 35,209 employees in the upcoming years. So this is the small comparisons. So we can understand that whether the results of Infosys, the market is going to react positively or negatively. But based on the US ADR data, the Infosys is not going upper side, it's falling. So it indicates that Monday also the Infosys may get fall. Now we'll come back to the HDFC Bank results. It came today, that is 16th. HDFC Bank Q4 profit jumps to 23% to rupees 10,055 crores. Net interest income reaches to rupees 18,873 crore. So HDFC Bank recorded a 16.8% on year growth in deposits at 15.59 lakh crore as March of 2022. This is with the retail deposits rising 18.5% and wholesale deposits growth at 10%. We know that HDFC is falling last week also. It closed at minus 1.9%. The price of closing price 1,464.95. That is almost minus 28.55 rupees. Fell in the last Wednesday. We are believing this also may continue based on the global cues. because of both the results, Infosys as well as the HDFC Bank, how the market going to be react, we have to see. But my prediction is the market is not happy about the both the results because the expectation is very high from the investors. The next one, good data is regarding the mutual funds data. A growing country like India, many people have started the SIP, that is a system and invest plans. When we see the data from 2020 and 2021 and 2022, the data shows the positive news for the market. In 2019 and 2020, the SIP investments was 1 trillion, which was declined to 96,080 crore in financial year 2021. But at the same time, this fiscal year it again bounced back to 1.24 trillion, because what we are understanding is when compared to 2020, in between 21 it fell down slightly, but again now it jumps back to 1.24 trillion. So quickly let us see that equity wise, scheme wise, which one has performed very well. And there are many schemes, that large cap, mid cap, and large and mid cap combined, then flexi cap, ELSS, and small cap. So quickly the top performer only we are going to see. We see in large cap, quant focused fund 51.99%, then mid cap, PGM India mid cap opportunity 71.49% return, large and mid cap, quant large and mid cap fund, that is 51.72% profit. Then again flexi cap, if you see that again quant flexi cap fund 75.22% return, ELSS quant tax plan 81.97% return, again small cap, again that quant small cap fund. Everywhere the quant fund has performed very well. It looks in all criteria, whether it is large cap or mid cap or small cap or ELSS, everywhere the quant fund are performing well. So one more important news for the upcoming week. The today news from the US market is the sharp rise in the bond yields at the US. So if you see the graph in the left side, this is the downward trajectory for the historical trend in Sensex earning yield spread relative to US Treasury yield. The red color shows us the earning yield spread for Sensex. We are seeing the blue color average value. So when we see that the spread has declined to a 3 years low of 108 basis points against 149 basis points in April 2021. It was 149 in April 2021. Now it is goes to 108 basis, that is below average. Even when we compare to 2020, it was 468 basis after the post-COVID. But now it is highly falling down when we compare this Sensex earning yield when compared to US Treasury yield. So this is the one of the negative, and this is the main reason why these FIIs are selling, because they feel that Indian market is high valued and overvalued. It is better to take that money and put it in the bond. They will get the stable and constant yield from the bond yields, and this is the negative news for the market. And according to this, the upcoming week the market is going to be behave. The next negative news is inflation and fiscal deficits. As per the consumer price index CPI, based on the inflation in the March, it may lead to India's first repo rate hike in nearly 2 years in June. Everyone aware, our RBI Governor Shaktikant Das, he didn't raise the repo rate as well as the interest rate in last 2 years. He maintained the same, but the all predictors like CLSA, Credit Suisse, JP Morgan, Barclays, SBI, Ecorap, they are all analysts and they have the same type of conclusion, like the inflation is increasing based on the consumer price index. So anyhow they have to increase this interest rate, but that as per their prediction they are giving ups and down. Some people are giving 7.5, some people are giving 6.3, but everybody is giving that it has to be done. So there is no options until to increase that interest rate. So come back to the technical point of view. When we see that technical chart of Nifty 50 in last Wednesday, it has formed the bearish candle. Now almost based on the chart, it looks like that it touched the maximum level and slowly it's falling down, and there is a scope to falling more on this point, because there is no good point or there is no good global cues, and we have the negative news only. So overall we can conclude how the market going to be behave in the upcoming week. The first point is most Asian markets were in the red in the last Thursday. The second most important point is the surging inflations. The continuing Ukraine-Russia war has added to the uncertainty about the global economy recovery. Third one is central banks in several major economies, including the United States, Canada, and Britain, have already started raising interest rates. Still, India only is not rising, but as we have seen that based on the consumer price index, there is no options, we have to rise. The Nifty is currently respecting the first line of defense, that is 20 EMA on the daily chart around 17,400, and its breakdown can push the index to the 17,250 zone. Even some predictors they are saying it may go to the 16,900 also. In case if it is a rebound based on the results what we have seen for Infosys and HDFC, there is no chance to go very high. It may be go up to 17,650 to 17,750 zone, and that zone would be the immediate hurdle to go upside. So overall, market will be eyeing quarterly results to gauge the future trajectory of the market. So this week, the upcoming week, there are many quarter results going to be come from the many companies. So overall, that market may behave based on the individual stock basis, but Nifty may not go up, but there is no scope to go upper side, but there is many chances to come down, but it may not fall tremendously. There is a chance maybe 17,000 to 17,500 it may play in the upcoming week. That's all viewers. Thank you. Bye bye. Thank you for your time.